Robert Kiyosaki, the founder of Rich Dad Poor Dad, has long been a proponent of gold and silver. Why? Because he doesn't want to hold cash which can be printed at will by the Fed. And as we can see here, since the beginning of 2020, the Fed has printed more money than it had done in the previous 12 years. That's more in the past 18 months than the previous 12 years combined. Now, if you spent much time researching Bitcoin, you'll know that it was created on the back of central banks printing money in 2008 and 09. And this narrative has been one of Bitcoin's largest driving forces over the past 18 months. So it shouldn't come as a surprise that Kiyosaki also holds cryptocurrency. Well, in a recent interview, he shared his thoughts on where Bitcoin and crypto is headed next. And he outlined his plan by sharing the exact price at which he will be buying more Bitcoin. So in this video, we're going to hear the thoughts of one of the most influential financial educators over the past few decades. And I'll break down exactly where I agree and disagree. Hi and welcome back. My name is Tom Heavey. I hope you're doing well. Let's get into it. And I'm not going to make you wait. Instead, let's just jump straight into this clip with Kiyosaki.
You know, Bitcoin is important. It's going to crash. I think if it goes to 27,000 a coin, I'm going to back up the truck. I'm going to buy more. You know, because I'm very optimistic about Bitcoin. And let me explain why, but also why the risk is here. This is macro financial education. Between 1960 and 1980, my generation, the boomers, didn't like stocks because everybody, at my time of when I was a kid, everybody said anybody invests in the stock market is a gambler. Now everybody's in the stock market. So how did that happen? Well, in 1974, they brought this thing called a 401k out. I won't touch that thing. I would not touch a 401k or an IRA. Why? Because I don't have to. They tell you what you can invest in a 401k and an IRA. I refuse to do that. I refuse to do that, but I don't have to do that because as an entrepreneur, I create my own assets. I don't need the stock market. You do. I'm not saying don't invest in it. I'm not saying don't have a 401k, don't have an IRA. Just screw you. I'm not going to be told what to do. That's why I'm an entrepreneur. You like being told what to do? Go to school, get a job, save money, pay your taxes, get out of debt, and invest in the stock market. I don't want to do that.
The 401k, it's another way of controlling you and how you earn your money until the day you die.
More than that, it's what you have to invest in. Mm-hmm. They had to do it because my generation wasn't investing in it. Mm-hmm. So that's why between 1960 and 1980, they didn't like stocks. So the 401k came out. Then what happened is in 1987, the stock market crashed. So Greenspan comes out. He's a Federal Reserve guy. Remember, the Federal Reserve is not American. It's not a government agency. So he came out, and what Greenspan put was what I call a PPT. It's the Plunge Protection Team, or also called the Greenspan Put, or also what people say, don't fight the Fed. Basically, what Greenspan did is every time the stocks crashed, the Plunge Protection Team would protect you. So my generation, the boomers, are going, well, I don't have to worry because every time the market crashes, the Federal Reserve Bank and the Treasury will bail me out. So that's today we have our US corporations are zombie. 20% of US corporations are zombie corporations. It means they're broke, but they're being propped up by the Federal Reserve Bank and the government. That's communism. So anyway, stocks get protected. Gold is a good investment because the Fed, all the central banks in the world now own gold. So they're not going to let gold crash. They'll do something to make sure the price of gold stays up. So I don't like stocks, but I like gold. Silver is getting more valuable because gold, all the gold never disappears. It just keeps piling up. But silver is being used in the Green New Deal, in solar cells, in medical things. So I like silver. And if you can see back here, look at this here. Silver was $2. It hit $50 here when the Hunt brothers were trying to manipulate the gold market. And even today, it's only 27, but you can't get any. You can't get any because they're manipulating it. They're trying to force it higher. Well, I'll say it one more time. This is how much opportunity you have, and that's gold, silver, and crypto. It's not that big. And you can make more money planting apple trees. So, or water, like that deal I was talking about. Okay. So here's stocks. The government will make sure it doesn't crash. Gold will not crash, but crypto could. You know why? Because the Fed doesn't want it. Because the reason I like crypto, the reason I buy Bitcoin and Ethereum and all that stuff is I don't like the Fed. When I talk to most of the young guys, they don't like the Fed either. But the problem is, and this is why you've got to be smarter, is that the Fed wants to take this out. The European Central Bank, the ECB, wants to take it out. The Bank of Japan wants to take it out. The Bank of China wants to take it out. So that's why all you crypto guys, you've got to be smarter today. You don't just sit there and go, oh. Does that make sense to you, Alexandra?
Yeah. No, it's this conversation has cleared up a lot of doubts I had, because it just goes to show that the fear the media can cause over something that might not even be happening.
Right. Mm-hmm. So you crypto guys, you got to be smarter, because what possibly, it hasn't happened yet, is a Fed coin or a yuan coin, a Chinese coin. China will probably have it before the US. Mm-hmm. And there will be a European coin. And they want to destroy Bitcoin. So you guys in Bitcoin, you've got to be smarter. So as it's coming down, like I said, I'm still going to buy more. But when it passes 27,000, I'm going to back up the truck, just like I did when it passed 9,000. In 1971, I was on my way to Vietnam here. And gold at the time was $35 an ounce. It was illegal for Americans to own gold in 1971. See, Bitcoin and gold are in the same family. The reason I buy Bitcoin is the same reason I buy gold and silver. I don't save dollars. Why would I save something they can print? Doesn't make sense to me. Okay. So 1971, gold was $35. Silver was about $1.90 or $2. And then what happened is by 1974, President Gerald Ford made it legal for Americans to own gold. Up until that time, I was smuggling it in. I was a criminal bringing gold into the country. I was buying it in Hong Kong and sneaking it into the States. So I was a smuggler. But Gerald Ford changed that and it jumped to $100. So my $35 went up 3 times, let's say. And then by 1978, it was now 300. So the same thing so when I saw Bitcoin rising, I saw the same thing going on, except not as volatile. I mean, Bitcoin is much more volatile than gold, but this was the high point here, is around 1980, gold hit 650 an ounce, but there was a 2-day spike when it went to 850. And all the idiots jumped in. Gold's going up, gold's going up. And I watched all these guys who thought I was an idiot back here for buying it at 35. They jump in here, and the same thing just happened. It drops in 2000. This is 1980 when Reagan was in office. So it drops in 2000 to $312 an ounce. I don't know what silver was doing. I was still buying silver. I wasn't paying much. It was about $3 or so, $10. I don't remember. But I backed up the truck here. Mm-hmm. I was buying gold at about $350 a coin. I thought I died and went to heaven. And then what happened is 2008 came and the Great Reset hit, and gold for the first time hit 1,000. So it took from 1980, 20-something years to get to 1,000. Mm-hmm. So I was doing really, really well because I don't save dollars, I was saving gold and silver coins, eagles. And then what happened in 2011, it hit $18.95 an ounce. And then it dropped to, today it's around $18.73. So that's real markets. So Bitcoin goes up, Bitcoin goes down, and all that stuff. It's not any different than gold. It's just more volatile because you guys are more tech savvy, and you can Reddit and GameStop and all that stuff, and you guys trying to corner the silver market. As I said, you guys are more sophisticated, you have more aware, but you don't have the experience yet. So keep going, but you'll get that experience. So my friends who are laughing at me here aren't laughing today.
Okay, so what I really want to focus on is Kiyosaki's plan to buy more Bitcoin if it drops to $27,000 per coin. Now, if you have access to the kind of people that Kiyosaki does, then maybe this might work for you. For me though, this is not the best move. My approach to investing in crypto has always been really simple. Over the past 4.5 years, whenever I have spare money, I take a percentage and I buy my favorite projects. It doesn't matter what the price is on that day. If I buy regularly, then over time, I'll get a good average entry price. Now, for me, I've been working for myself over the past few years, which means my income, it fluctuates month to month. So some months I've been able to buy more and other months I've been buying less. For most people though, they have a steady income. So the strategy of simply taking a certain amount and putting it into crypto every month is very simple. It's called dollar cost averaging, and it's the best way to invest. I'll show you an example. Let's imagine that you started buying Bitcoin once a month at the very peak of the mania in 2017, December 17th, 2017, the worst possible day to buy. Now, if you continued buying every single month, this is what happened over the next 6 months. To give some context, let's imagine you're also doing the same for the Dow Jones, the American stock market. This is the red line. And let's also add gold. This is the yellow line. As we can see, 6 months later, both gold and the stock market have clearly outperformed Bitcoin. So not so good so far. Now let's fast forward to 1 year on. Again, as we can see, Bitcoin is lagging both gold and the stock market. What about 2 years though? In May 2019, this is when Bitcoin crossed both gold and the stock market and became the better investment at this time. So for me, what's really crazy here is that in May 2019, people had completely written Bitcoin and crypto off. And yet, as we can see, it had actually been the better investment over the previous 18 months if you had simply used dollar cost averaging. Don't forget, we've also begun this on literally the worst possible day for Bitcoin. And for full context, at the end of May 2019, Bitcoin was at a price of just over $8,000, which means it was still down nearly 60% from the peak. That basically means if you went all in on December 17th, 2017, you would be down by 60%. But if you started dollar cost averaging on this day instead, you'd be up an impressive 30%. Now let's fast forward to 3 years. As we can see, there is a lot of volatility, but Bitcoin finishes the window the highest of the three. And finally, if we include everything up to today's price, a couple of things jump out at me straight away here. First off, Bitcoin has outperformed other investments even if you bought at the very peak, but only if you use dollar cost averaging, not if you go all in. If I showed you these charts again, but you simply went all in at the very peak, you'd still be up by around about 50 to 60% today. But Bitcoin's chart will be a lot closer and even slightly lagging the stock markets. And the second thing that jumps out on me is the volatility of Bitcoin. If we go back to our previous 3-year chart, we can see this more clearly. Bitcoin was significantly lagging the stock market and gold by the end of 2018. By September 2019, just 9 months later, it had climbed well above. By the end of 2019, it was back to the same level as the other two. In just the next 3 months from here, it shot well above both, before falling back to the same level of the stock market and even below gold. In the months after, Bitcoin may have finished on top, but the fluctuations are huge. The reason the dollar cost averaging works so well is because it's the best method of reducing volatility. And if there's one thing that we know about crypto, it's that it is ridiculously volatile. So we have Robert Kiyosaki's take on it. He's a big fan, but he's waiting to see if Bitcoin drops to 27K. For me, the data clearly shows that if you have a stable income, dollar cost averaging and having a long-term mindset pays off the best. Now, of course, this is true of the stock market too, but the more volatile the investment, the more that we need to focus on these two things. Now, I'm interested to hear your thoughts. Have you been dollar cost averaging into Bitcoin and crypto, or have you been buying in large chunks? Let me know in the comments below. Thank you for watching. I will see you again very soon.